Good morning and welcome to Stock Market Today. It's Tuesday, January 21st, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you can see a lot of the content that we get for this show, as well as give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. Hope everybody had a nice long weekend, and we'll get right back at it. U.S. equities were mostly higher in Friday's trading as the S&P 500 posted a second straight week of gains. Comm Services and tech outperformed while industrials and healthcare lagged. Treasuries were mostly weaker with the curve steepening. The dollar was stronger against the euro, little changed against the yen. Gold was up 60 basis points and WTI crude was higher by about 10 basis points. Again, your leaders, Comm Services, utilities, tech, and materials. Underperformers, energy, industrials, and healthcare. As we get to the desk this morning, S&P futures are down about 30 basis points to start the holiday shortened week. They are off their worst levels of the morning. Asian markets were lower overnight on the heels of an outbreak of coronavirus in central China. European markets are also weaker. Treasuries are stronger across the curve. The dollar is weaker against the yen, relatively unchanged against the euro. Gold giving some back, down 30 basis points, and WTI crude is lower by a little over 1%. So as we take a look at the structure of the S&P 500, we have record highs as Comm Services has been coming on strong of late and drove large caps higher. Near-term support is in the 3,200 to 3,250 range. We're looking for resistance levels to form. The RSI is in bullish ranges and remains overbought after that strong move higher on Friday and throughout the back half of last week. Chaikin money flow is bullish as well. So we've identified the support levels. Markets are under a little bit of pressure here this morning. Continue to stay the course, right, while managing risk and identifying the key levels that would warrant getting more aggressive. We've outlined them for you here, as we do every morning in this show. Continue to focus on leading areas of the market for bullish and very bullish stocks that become oversold, especially if they have bullish money flow, while continuing to manage your risk profile across the market and across your exposures. Let's dive into our market in a minute now. What are we writing about in our note today to Chaikin Analytics clients? Well, we returned from the long holiday weekend with stocks at record levels. Technology remains the strongest relative trend, and communication services continues to improve. Energy and materials are our lagging groups, and I note that they have bearish ETF ratings. So we think that those remain groups to avoid. And as I said, futures do point to a lower open here today. Taking a look at the power bars now for the major indices, the Dow tacked on 16 basis points on Friday. Power bar ratio back to the bullish side of the board. 6 bullish or very bullish stocks there for 5 bearish or very bearish stocks. S&P 500, 32 basis points, 142 to 48, bulls to bears. NASDAQ was an outperformer on the day, up 50 basis points, 28 to 4, bulls to bears for the NASDAQ. Small caps underperformed, actually moved lower on the day, down 31 basis points, 688 to 203, bulls to bears on the small caps, which have started the year underperforming their large cap peers. As we said, bonds downtick, sending yields higher on the day. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major markets across the board, even away from what we're looking at here, do remain mixed. Let's turn now to our stock of the day. Stock of the day is auto-generated, and it's based on the power gauge rating. Today's stock is Kemper Corporation, KMPR, the ticker symbol there. And stock has a very bullish power gauge rating due to very attractive financial metrics, very strong earnings performance, as well as very positive expert activity. The technicals are middle of the road. So again, I said it's auto-generated. We'll analyze it in real time, just as if you came to me and said, hey, Dan, what do you think of Kemper? Well, here's the analysis that I would give you. We have a very bullish stock and a strong trend above the beginning to rise long-term trend line and a strong industry group. However, what I would say is the market and the model are not in agreement, as Kemper has been lagging the SPY since August, and we're actually beginning to see the intensity of that underperformance picking up of late. Add to that the fact that the stock is overbought, and for me, from a tactical standpoint, it's hard to get excited about Kemper in the here and now. Remember, we want bullish and very bullish stocks that are outperforming the market, and we want them when they're oversold, preferably with bullish money flow. Now, we do have bullish money flow here as the stock has had a little bit of a run from $72 to about the $78, $79 level, but overbought and lagging the market keep me at bay, right? Especially the lagging the market. We want leading stocks in leading industry groups. We want them when they're oversold. This just doesn't fit the bill. I'm not going to throw it out completely. I'd like to add Kemper to a bullish watch list, right? I never like to think that an idea has been wasted, and we can watch now. We can see for signs that relative strength is beginning to improve, and if that is the case and the stock works back down to an oversold condition, all else being equal, i.e. we remain bullish or very bullish and in a strong trend, well, then this becomes a lot more interesting of an idea. But I can't get excited about Kemper as an idea now. With the market at all-time highs, the stock nowhere near all-time highs, is overbought and is lagging the market. We're going to add Kemper to a watch list today, but not going to do anything with it. Hard for me to get excited in the here and now about that name. Let's look at our sector tracker now, and it's kind of an interesting dynamic at the top of the list. We touched on this on Friday, and it continues here today. Over the past 5 days of trading, utilities are your best group, up 3.66%. And that's largely taking place as yields have started to roll over a bit, right? If you take a look at a chart of the 10-year yield, rallied to just under the 2% level and has begun to roll over. And that's lent a little bit of a bid to the utilities and real estate on a relative basis. And it started to weigh on the financials, despite what can arguably be described as a batch of well-received earnings from the banks last week. Now, tech continues to be one of the top sectors of the market. We'll take a look at the relative chart of tech a little bit later on in the show, as well as communication services, right? These are two areas that have been leading the market of late. Materials, look, what looks like what has been a counter trend move. We're actually going to take a look at materials. The relative breakdown there has been significant. We touched on REITs, industrial staples, healthcare, and discretionary are all higher over the past 5 days. I mean, the market's higher over the past 5 days. So for us, we want to focus on what's outperforming. Financials, as I said, coming under some pressure as rates have declined and energy just remains an area of the market that we want to avoid, right? We've been saying, a couple of weeks ago, we were talking about energy. I was getting a lot of questions about energy potentially making the turn. And I was saying, yeah, you could argue that we could be making the turn, but we're not there yet. It's too early. Well, we've subsequently begun to roll over again. And if you look with the market at all-time highs, energy continues to lag, underperforming over the last 5 days. Now, speaking of the banks, our industry in focus today is regional bank services. And over the past 6 months, it's actually been an underperformer, lagging by 6.5%. Does have a power bar ratio that is very strong, 75 bullish or very bullish stocks in the regional bank services for only 2 bearish or very bearish stocks. It's currently ranked number 2 of 21 subsectors. And it's kind of in line with where it's been over the past week. Some of the indicative names there: QCR Holdings, QCRH, Great Western Bancorp, GWB, and First Horizon, FHN, all have very bullish Chaikin power gauge ratings. But let's take a look at the KRE here. All right, a little bit more of a mixed picture for the group when we look at it from a technical perspective. First and foremost, we can see that the ETF rating has turned neutral this week. Right? Still in a strong trend above the rising trend line, right? And also beginning to underperform. Remember, I said the financials were starting to come under some pressure as rates have started to roll over, and you're starting to see it here in the regional banks as they go from, the final months of last year being a good outperformer to now lagging. Overbought, oversold indicator rounding out of an oversold condition. Chaikin money flow is mixed. What I do see purely from a technical level is a breakout and a pullback to test resistance, now support, that is so far appears to be holding. So really do think you need to be selective here in the financials and with the banks. Taking a look at what's trending now, yesterday's S&P 500 movers and shakers, Friday's rather. Qualcomm caught an upgrade, up 4.5%. CenturyLink, word of an order, sent that stock higher by 3.7%. CFG earnings sent the stock higher by a little over 3%. No real news on ConAgra, up 3%. Yum Brands caught an upgrade at Morgan Stanley. That stock higher by 3%. On the loser side of the board, EXPD, negative pre-announcement, sent that stock lower 5.5%. CDW, along with NetApp, both commented on at Morgan Stanley. CDW caught a downgrade, some comments on NetApp, those stocks lower. Price target cut at Morgan Stanley for HPE took 4.25% out of that stock, and JBHT, JB Hunt, reported earnings, and that stock was lower by 4.25% on the day. So those are our movers and shakers from Friday. It seems like a while ago, but it really was just the last trading day. So let's dive into the charts now. On Tuesdays, I look at relative trends in the marketplace, try to identify where is the leadership, where are the areas of the market that we want to avoid, and we can safely say that technology has been and remains leadership. Taking a look at the XLK relative to the SPY, we can see a nice steady uptrend for more than a year now. We are above the rising 200-day moving average and actually went out on Friday at new relative highs. You can see the trend line firmly in place. Now, the ratio is overbought. The RSI at 77.72, so overbought. So the way that I see that is we've shifted into bullish ranges. Overbought readings give us a momentum confirmation. Could we arguably see a pause here? Of course we could, but looking at the bigger picture trend perspective, on a relative basis, there is momentum behind this trend. Add in the fact that we have a very bullish ETF for XLK, 26 bullish or very bullish stocks for 0 bearish or very bearish stocks. It leads us to believe that over the intermediate term, this outperformance is likely to continue. Now, if we take a look at the bottom of the chart, XLK on an absolute basis, trading at new highs on Friday in a nice steady uptrend. So technology continues to be leadership, and the weight of the evidence supports that leadership continuing. So we want to continue to focus on the technology sector and drill down on the different industry groups that are leading within the technology sector, right? Software starting to come to mind. Semiconductors have been leadership, so that's where you want to start looking or continue to look for bullish ideas. Another area of the market where we like looking for bullish ideas. We started to highlight it last week. We continue to highlight it this week. Comm Services. Take a look at the XLC here. Nice steady uptrend. New highs on Friday above the 200-day moving average. Fund also has a very bullish Chaikin Power Gauge ETF rating. 6 bullish or very bullish stocks for only 1 bearish or very bearish stocks, with momentum confirmation. Here's the RSI shifting into bullish ranges and now routinely becoming overbought. So the same analysis applies. Could we see a bit of a pause here? Absolutely, we could see a bit of a pause. However, momentum is behind the trend. Take a look at what's beginning to happen on a relative basis. At the bottom of the chart, we can see XLC was in a downtrend for about a year and a half, a little over a year and a half. We've subsequently broken through that downtrend line. We started to highlight this, as I said, last week, and it continued. We started to highlight it 2 weeks ago, and it continued through the course of last week. You can see just moving higher on a relative basis. Some of the big bellwether stocks within that group, like Google, really coming on strong of late. Now, we are going to get Netflix earnings later today, so that could impact the group, but just something to continue to keep an eye on. Comm Services, another area of the market where we want to go hunting for bullish ideas. One of the areas of the market that we want to avoid, we've touched on energy quite a bit in this show, but take a look at materials, because this really speaks to the importance of relative strength. Materials on an absolute basis, above the 200-day moving average, breakout, retest, starting to move higher. But take a look at the fund. It has a bearish ETF power gauge rating, 6 bearish stocks for 2 bullish stocks. Overbought, oversold RSI rather, failing to become overbought at the most recent highs. Now, it hasn't shifted down to bearish ranges yet, but not a lot of momentum behind the recent strength. And take a look at the relative breakdown. Big breakdown a couple of weeks ago and continues to kind of trudge along below broken support. So remains an area that we want to avoid. That'll wrap us for today. I will be back here tomorrow.